All right, we are going to do chapter 3 homework. So let me share my screen. Click the wrong thing. There we go. Right. I think it's in chapter 3. I think I've put them in here. Yeah. So you can come down here to chapter 3 problem assignment if you want. I'll click that. I'll do it this way. Either way is going to be fine. You can also click the McGraw-Hill Connect, just go directly there, but this automatically launched it. So it's kind of nice. All right, I'm going to go to student assignment view and we're going to go and take a look and see what we can do. Remember multiple choice. This is just telling you that if you do this don't do it by the subdue date, you will lose 50 points. It's not saying anything else. So multiple choice, I'm going to let you guys do those on your own. All right. Remember, you have your check your work, so it shouldn't be too bad. You have 5 multiple choice and 5 kind of fill in the blank here. So here's we're gonna classify some of these, and I'm not gonna do them all because it's a static question for you guys. But bottom line is we're gonna figure out what type of account this is. So equipment, it's gonna be a where are you? Property, plant, and equipment. Okay. Um, deferred revenue for the next. Sorry, I got some in my eye. Deferred revenue. Let's classify that as current liability. Let's find something that's a contra just so we can kind of have some fun with that one. Where's depreciation? There's got to be depreciation somewhere, right? Oh, allowance for uncollectible accounts. Let's do that one. That one's going to be a contra current asset contra. And let's do one more. Land's too easy. Let's do a lot of these are just assets. Income tax payable. That's current liability. Let's check our work. All right, we're good. It's not complete, and I wasn't intending on doing it, but fill them all in, do your best. Again, don't abuse the check your work feature. Okay. All right, this next one here is we're going to do we have the post-closing trial balance for Jackson Corporation. Basically going to create the balance sheet from this information. So since this is the post-closing trial balance, we have already closed the accounts to the retained earnings. So we don't have to do our income statement of stockholders' equity and the retained earnings. Okay. So what I'm going to do right now, because you're not going to be able to see this, instead of going back and forth, I'm taking a picture of this with my camera, so on my phone, so that I can just refer to my picture here instead of having to bounce between the two of them. Okay, so you can take a picture of mine if you want. Oh, look, my phone is connected to my computer. Okay, so cash, 50,000. Let's just go ahead and down here. We're going to start with our current assets. All right, let's look here. We have cash. And since that is the post-closing trial balance, I'm going to type it in because it's just faster. Because it's the post-closing trial balance, they should be in correct order. All right. So we have cash, that was 50,000. Then we have accounts receivable. That was 44,000. Then we have inventory for 85,000. Then I had prepaid rent for 26,000. That was for the next 8 months. So we are good there as a current asset. Then it says investment in equity security, short term. So we're going to throw that as 20,000. And I'm looking there. I think we are done with the current assets. So there's our current assets, property, plant, and equipment. We're looking for machinery. That's one of them. And machinery is 195,000. I think we want to put our accumulated depreciation here. There it was. There it is. And we're going to put that as a negative amount. We got intangibles. So we have a patent. And that looks like it. Patent was 89,000. So we have total assets of 312,500. Let's jump down to current liabilities. We have accounts payable for 13,000. We have salaries payable for 9,000. Income tax payable for 42,000. See, government always wants more, man. We should be paying our salaries higher than that, huh? Okay, there's our current liabilities. Income tax payable. We have bonds payable due in 10 years. Let's throw bonds in here. That one was $240,000. A lot of bills. Shareholders' equity, common stock. Okay, common stock, we got 130,000. Whoa, I didn't put a zero on there. I need one more. I thought it looked funny. Retained earnings, 54,000. And we don't match. What did I do wrong? What did I do wrong? Was my bonds too high? No, 130. Did I type in something wrong? Let me just double check the numbers. Always double check the numbers. Oh, my machinery. 195,000. I didn't have a zero there. 488,000, 480,000. So I'm glad I do this. I'm glad I make these mistakes with the zeros and I miss them. See, that's what I do. I just go through the first error. When you have an error, check and see where did you go wrong. I didn't even need to quick check my work. Don't quick check your work. Train yourself to look for the errors and know what makes sense. The minute I saw that this said 95 or 19,500, that was less than my annual or my accumulated depreciation. Can't do that. So always do that. Check my work. Should be good. I saw the red. I thought, oh my gosh, what did I miss? So anyway, now this has your headers in for you. Remember, they may not be there, so always watch for your headers as well. Okay. All right, this next one's gonna be a little bit more involved. All right, we got a lot more stuff and some information that we have to consider. We are going to prepare a classified balance sheet for Valley Pump Corporation. Again, this is still just accounts, and we're assuming, because we don't have the information, that our revenues and expenses and everything have been closed already. So we're just focusing on the balance sheet in this chapter. So let's start off here, and I am going to actually, I've already got this sheet because I knew this one was coming. We're going to start off here with cash, and I mean the numbers are different than what I have here anyway, but it's the same structure. So current assets, we're coming here with cash, and the cash on this was, I should just take a picture, shouldn't I? Just take a picture, Brian. I don't know why I didn't do it. Just take a picture. Just take the picture. All right, here we go. And it wouldn't hurt to take a picture of the additional information as well. Okay. All right, so we have the cash, and the amount for me was 42,000. And then we're going to look for the next asset. So these are not in order, and we can do, I think we can do account receivable. Did we have a specific information about accounts receivable? No. Investment securities, notes payable, and the land. Okay, so that's what we got to watch for. So accounts receivable, let's type, put in accounts receivable. Okay, so I'm putting accounts receivable in here, and mine was 90,000. Again, I've taken pictures of this, so I'm just referring to my picture. I'm not bouncing between the two of them, all right? And because this is a classified balance sheet, we technically should be putting these in order of liquidity. I'm going to not do that just because I want to see if McGraw-Hill will still take it as long as they're still classified as the right thing. But let's see, it's next. Inventories. I'm gonna wait for inventory just because I can. Investment in equity securities. Because I believe, if I remember right, that information said something about that. And I think we got to deal with it. So the $78,000 balance in investment in equity securities account represents an investment in the common stock of another corporation. We intend to sell half of the stock within the next year. So half this balance needs to go here. 78,000 divided by 2. I don't want to do the math in my head. 78,000 divided by 2, 39,000. We're going to pop 39,000 here. And I'm going to come down here to investments, and I'm going to type it in here, investments in equity securities, and I'm going to put 39,000 here, so I don't have to remember to do that. Oh, you know what? Actually, I just saw this on there. Look at this. Look at this. Let me see if I can find it here. Allowance for doubtful accounts. We got to put that with our accounts receivable. So let's just switch these. That'll make more sense. 39,000, 90,000. Investments in equity securities and accounts receivable. You can try it if you want. See if it'll work. You don't have to go back in there, but we're going to show that as a negative 7,000. I missed that. That was my fault. Now I think we can hit inventory. Inventory was 115,000. Like I said, I always find typing it is faster for me. If you need to pause the video and do the look for it and select it, then that's fine too. Prepaid expenses for 49,000. Looks like we kind of lumped them all in there. What was it? 49,000. Yeah. I would recommend printing this off, even if you take a picture of it. If you can somehow print off so you can mark off the ones when they're not in order, you can get lost in this. So make sure you don't get lost and forget one. All right. Current assets. I believe we're done with the current assets, but we're not done with our investments because we have here, it says $154,000 balance in land, consists of $117,000 of land where the plant and office building are located. The $37,000 is held for speculation. So $37,000 of land is an investment. Okay. Let's put that other amount of land over here. And it said how much? 117,000. All right. What else we got going? So we've dealt with this now, the land. We've dealt with this. Last thing was this notes payable. So we'll look at that when we hit liabilities. So we've done cash, accounts receivable, inventory. So these three are done. I haven't touched that because that's a liability. Investments in equity securities, land building, 385,000. Okay, so we have buildings there, and then I saw equipment. So let's find out what the equipment was at. So we have buildings, equipment, 109,000. Oops, wrong one. So I don't necessarily like it, but this one broke the accumulated depreciation off for the building and the equipment. I don't know why it did that, but we're just going to go with it. Building was 117,000. 42,000. So our total property, plant, and equipment is 452,000. I believe the last thing we saw here was patent. Oh, copyright. I apologize. Copyright, 29,000. I think I saw property, plant, and equipment, which threw me off. And I threw myself off. I'm looking at my phone now, 29,000. All right, so there's our total assets, $885,000. Now let's boogie down onto current liabilities. All right, let's start up here. Oops, let's go back up here. Top interest payable, 27,000. Let's throw that in there. Interesty. Interest payable was 27,000. Then we have, just looking at my phone too. Okay, I think we're good with everything above that. So we're just looking at these, but we've already done this 7,000 too. So this one is accounts payable, 82,000. $82,000. Okay, next deferred revenue, 37,000. 37,000, yeah. All right, now we're doing current, so I'm thinking that might be it. Let's look at that notes payable note really quick. The notes payable account consists of 137,000. Oh, due in next 6 months. And then 201,000 installment notes, 60,000. What year is this? Okay, we're in 27, and this just said, oh, where am I? We're in 27. And this says our first installment payment of 67,000 is due next year. So we got to include the 67,000 and this 134,000 together as our current portion of the long-term debt. So I got $201,000. that coincidence or did I do something wrong? 134 plus 67. Huh. Coincidence. So 201,000 is current. So we're going to go notes payable current maturities of long-term debt, 201,000. Now that's all the current stuff. Let's find out what was our notes payable here. So we got to subtract 201,000 out of 335. So we have 134,000 of long-term notes payable. How much was that? I forgot. 134. Hold on a second. I just something. Note due and installment. I wonder because I just thought when I typed in that, I wonder if there's something different about this. Hold on. Current maturities of long-term debt. Notes payable long-term, current maturities of long-term debt. I'll bet you've got to break this apart. Let me look at this. Current portion of long-term debt. 134,000. Then what's this other one? 101,000 note due in 3 installments, 67,000. I may have mixed those two up. My brain's not braining right now. Let me look at the accounts real quick. So we have notes payable, 3 different current maturities, current notes payable long term. Okay. Don't want to. Okay, so this is notes payable current. I really don't know actually with this here. I mean, I know the difference. I just don't know notes payable, like which one's the current maturities. I might be mixing this up. If I do, great, we'll figure this out. Okay. And then this is notes payable long term. All right, pretty sure that's, I'm not pretty sure, but I hope it is. Okay. So that was the note that we're done with. So now we have allowance, we did that. Okay, so I think we're done. Now we just got to do common stock and retained earnings in the equity. Common stock, retained earnings. Common stock for me was 370,000. Retained earnings was 34,000. So 885. Oops, too far. 885. So with these two balance, let's find out if I got those accounts right. Did I? Yeah, I did. Good. Yeah, like I said, I mean, sometimes I just, you flub them. It's, life could be worse. You lose like 0.02 points if you don't get those right. Anyway, hope you enjoyed that one. Let's check out number 9. All right, this is another one of those ones where you're basically just trying to figure out kind of which ones where things go. So we're trying to disclose this information. Where do we need to disclose like a related party transaction? So here, I think it's going to be in a separate disclosure note. In the summary of significant accounting practice notes, usually practice number 1, and that's where your depreciation method is going to be. Allowance for uncollectible accounts. We put this straight up on the balance sheet, don't we? So we're going to put that as C. That's kind of what we're looking for is where do you find this information? Okay. If it's inventory related, or sorry, inventory, if it's financial related, it's likely on the balance sheet, but these other places are going to be in the notes and is a separate disclosure note or a summary of significant accounting policies. So think about this. The makeup of your investments, where is that going to be found? Is that a significant accounting practice? No, that's just what your investments are. Composition of long-term debt. Again, that's just something that you have. It's not an accounting policy. Your investing costing method is. So just Think of it that way and you'll be fine on this one. Excuse me. And we're good with those so far. And then the last thing here is, maybe I'll let y'all do this one on your own. You should have these. Yeah, I'm gonna let you do this one on your own, I think. Current ratio, current ratio. I'll just show you the current ratio. This is what you're gonna do, right? You're just gonna type the answer, but you're gonna calculate it here. You should have, in my lecture, you should have wrote down all of those formulas, right? So the current ratio is total current assets divided by current liabilities. Which one are current assets? Everything here except for the property, plant, and equipment. So 350 plus 250, 250 plus 200 plus 250. Divide that by current liabilities, which is summed up for you, divided by 450. I get 2.33. Let's throw it into current ratio. It says round to 2 decimals. Okay, that's what you want to do, right? Just use your formulas and calculate that. I don't want to calculate those for you. I think that's too much given to you, and you need to do some of that by yourself. All right, you guys, good luck. And if you have any questions, you know where I'm at.